May profits be upon you. Welcome to another weekly market forecast. The focus of this video is on gold, XAUUSD, and we're looking at the monthly time frame. We're going to jump right into it. All right. If you're looking at the monthly, all you can see is higher high, higher low, higher high, higher low, higher high. There is no bearishness, especially in this last leg. There is no bearishness. There's no reason to think taking any sell positions. Okay. You see the stall out. Watch. You see the stall out up here. All right. It's starting to stall. This was April after declarations and announcements of tariffs and whatnots. And price moved higher, hit the all-time high, and then moved back, retraced back down below the open. All right. And then we closed in a what do you call it? An indecisive way. This is an indecisive candle. We followed that by another one in June last month, and this month we have 4 days left. In this month, it is on its way to looking exactly like that. All right, so we want to be careful here. We don't want to be jumping into buys and especially sells, but we don't want to be jumping into buys because you can see it is in retrace mode over here, right? We go to the weekly, okay, but the takeaway is that we're still bullish on the monthly. What about the weekly? Well, the weekly is interesting because here we are in this range, right? This is the range here, and price is just moving to the side. Why? Lots of things going on in the markets. Declarations of more tariffs, but the market's kind of shrugging it off. We have conflicting data coming in, economic data for the U.S. We have see the inflation ticking up a little bit to 0.7. We see job numbers coming in or whatever. But this week specifically this week, we have FOMC on Wednesday. All right, the Fed is going to give an interest rate decision, and then 2 days later on Friday, we have the non-farm payrolls. This is why you'll see this kind of mess, all right, moving sideways until we get those high impact news items behind us. The markets may move to the side, and we want to be careful before we start thinking about new entries, okay, new entries of trades. Okay, now you see these 2 days here, and then we have 2 days, 2 days coming down below these lows, and you're thinking, we might be turning bearish, but that was only to the middle of this this trading range. All right, it's not giving us anything, and then we have these indecisive candles here. This move pulled up. Oh, hey, prices gold is going higher, and then we retrace. That was a big nothing burger, right? All right. So if we move to the daily, this is where we start to see some things a little bit clearly, right? One, these are the things I want to point out. Look at that. That's not what I wanted to do. I don't know why it's acting funny here. All right. This is relative equal lows. All right. That relative equal lows are going to be a magnet for price, a draw on liquidity. All right. I want you to see that this high was taken by this high, right? But we did not see that high being taken by the latest swing high. I'm not sure why my buttons are freezing up here, but it should say it. This is what I call a swing fail. All right, a failure swing. All right, these lows look like they may be the draw on price, especially because there are these ascending lows here that are going to act as draws on liquidity. All right, but I don't want you to think, hey, we should be taking shorts. Why? Because here is our trading range once again. All right, and here is the middle. And where are we? We're right at the middle. Okay. So uh, we have to wait. We have to be patient. We have to let something develop. All right. What I want you to see is what the structure is. We come down here, make this swing low here. All right. Price pushes up, pushes up, pushes up, and we finally push past that high. All right. So we get what we call a CISD, a change in the state of delivery. Right. Price comes back to that change in the state of delivery, uses it as support, moves up, comes back to that same CISD, pushes up, all right, uses that support and pushes up, but we fail to take the high. Are we coming back? Every time price reaches this area, what do we get? A push, a flush of prices, a flush of price. Are we going to see the same flush? Are we going to take out these lows like when price pushed up from here, making this low, and then come back and sweep all of these lows, all right, to the CISD? Are we getting ready to test that CISD again? That is the question in my head. That's something I'm going to bear in mind as we move forward. Here's the deal, though. I want you to pan out just for a second. Pan out. And I want you to see, if we go to the weekly, there is a trend line that I want you to pay attention to. I'm not a trend line trader. I merely market to see where price is. All right. I want you to see this. This doesn't mean much to you right now. All right. Look at this on the daily. And I want to change that color. I don't know why it's doing that. All right. Here's the low. Right. Here we are. That's for me, that is a pretty compelling picture. What if we extended it? Look at that. Look how pretty much on it hits those lines. All right. What does that mean? Do we have support for higher prices? Don't be too quick. What I want you to see is, all right, what I want you to see here is that we are hitting the support line of this trend line, right? We're hitting that support, and if we mark out the fair value gaps, let me see, where's my fair value gaps? Doggone it. All right, if we mark out the fair value gaps, there was a bullish fair value gap here. All right, it was taken out. All right, which means there's a good chance this inverts. There's potential for this to invert. Price could bounce from this, react from this trend line support, come back up to that fair value gap, and then flush to take this low. Let me tell you this, all right? Until this low is taken, I'm not entertaining shorts, all right? This is still, overall bullish, but we've been bearish for the last 3 days. On the daily, we are bearish, okay? All right, but uh, uh, we're taking the low. And this was the beginning of the week. All right, we've already taken the low of last week. We made a new low for last week, right? And this here is that structural point that I would be waiting for a break before I start thinking about shorts. It's as simple as that. And I'm going to mark it here, and we have it at 3,309.6. All right. Until we breach that, until the market takes that out and closes below it, I can't think about shorts. I wait for the price. I don't know what just happened there. I would wait for price to pull back up to however it breaks here. If it's a fair value gap, that'd be even better. But I wait for price to pull back up before so I can take a high probability trade to take out the next low and possibly down to the draw on liquidity, which is these relative equal lows. You know what it might take? to move that, a catalyst, that would probably be one of the events that's going to take place this week, which is, um, sorry, which is the this Fed interest rate decision, which is on Wednesday, and then Friday we have the non-farm payrolls. So I don't jump into anything right from the bat until you see something that is concrete. If price comes back up into this fair value gap and gives a bearish reaction on the smaller time frames, down by the 5 minute, all right, down by the 5 minute, all right. I'm talking about this will be a point of interest. I'll be looking for it on the 1 hour, right, and if it comes back up, then I'll be looking to see price come and take that low out. I need to see that break of structure here. I need to see that break of structure, BOS, all right, before I consider taking a short there. I need to see that, all right. This here, for a swing trader, this is a must. You have to wait till that breaks before you start taking swing trades. All right, day traders, yeah, you could take a day trade from here if you see the signature by price that allows us to take those trades on the smaller time frames. But this line here is the one that I would be watching if I am you, and I'm gonna thicken that up, and I'm gonna turn it green. And okay, sometimes these things work out. I made the wrong color green. I'm sorry. All right, so that's it. All right, so wait for the BOS. Be patient. All right, wait for the BOS here, or if price finds that, because this is the protected low. All right, this is the low before this high was made, before it broke this structure here. All right, this created our natural area of fair value. All right, and you wait for price to come back into that, and you wait for the break of structure to the upside, and then you can take more longs. But because we've broken through this fair value gap, that's a very bearish indication for me, because we penetrated this low to the 786 fib. From this low to that high, we come back to the 786 fib. We even pierced past it. This is starting to look more bearish than bullish. So you want to wait until you see a distinctive bullish break of structure in either direction before you jump into a trade. I hope you enjoyed this video. Make sure you hit the boost or the like button, and I will see you in the next one. And thank you for watching.